Last week, traders were anticipating tougher auctions from the U.S. Federal Reserve after the data on the U.S. inflation was released. The pace of growth in consumer prices exceeded the forecast. This led to a decline in the U.S. stock market, which posted its longest losing streak since 2001. At the same time, the U.S. dollar index has reached a new 20-year high. The US dollar index, which measures its value against the basket of 6 major currencies, is holding firmly near the level of 104. Investors are sure that the Fed will continue to raise the rates straight by 75 basis points instead of 50. However, Federal Reserve Chairman Jerome Powell warned that bringing inflation down to the central bank's target of 2% may cause some problems, including recession. In fact, there is already a decline in the U.S. economy in the first quarter of 2022. A recession is characterized by zero growth or negative gross domestic product reported over 6 months, and this means that a contraction in the U.S. economic growth in the second quarter will officially indicate a recession in the country. This remark from Jerome Powell was perceived as a dovish sign by the market, so expectations of a 75 basis point rate hike have eased. Yet, the US dollar is still trading at its peak levels. Meanwhile, the euro hit a 5-year low against the US dollar, having approached the mark of 1.0341. This single European currency has been under strong pressure since February, and this year due to the special operation in Ukraine, which exacerbated the energy crisis, fueled inflation, and slowed economic growth. In addition to this, the European Central Bank is reluctant to tighten its monetary policy unlike its foreign counterparts. Investors suppose that the ECB may raise the rate by just 25 basis points in July and September. As for the Bank of England, it has already raised the rate by 1%, but the British pound is still losing ground against the US dollar. The pound-dollar pair is trading near its 2-year low. The recent macroeconomic data confirms a slowdown in the UK economy, which is why the monetary policy is likely to remain soft in the near term. Therefore, the pound is likely to continue to depreciate further, and last trading week came as a shock to crypto traders. The price of Bitcoin tumbled to a 17-month low, hitting the level of $26,000 per token. By the end of the week, the digital coin managed to win back some of its losses. Currently, Bitcoin is consolidating near the mark of $30,000 per coin. The crypto asset suffered a sell-off amid fears of a soaring inflation and expectations of aggressive steps from the Fed. Besides, the negative outlook for the global economy also weighs on the crypto market. All these factors also affect the energy market. The possibility of a global economic slowdown amid coronavirus restrictions in China is offset by the looming embargo on Russian oil imports. Thus, despite high volatility observed throughout the week, the BRENT closed the weekly session at the levels it opened the trade on Monday. Strange as it may seem, gold is losing value in these turbulent times. The quote of the precious metal dropped to a 3-month low to trade at $1,805 per troy ounce. The asset is losing ground under the pressure from the rising US dollar. You have watched a complete review of a currency, cryptocurrency, and commodity markets on InstaForex TV channel. We wish you profitable trading and see you soon.